Is this the time to buy or sell Blue Apron? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. I have a theme in the megatrends called grocery delivery. It's very convenient to have it delivered, saw huge demand under the C-19 lockdown. On average, these stocks are down minus 70% from the highs, but I still think there is demand for these kinds of services. Here is Blue Apron, 19% from the 52-week low, a whopping 81% away from the high. So here Blue Apron shares pop after Kevin O'Leary picked it in Power Lunch CNBC. So yeah, it's the Kevin O'Leary from the Shark Tank show. Yeah, that's bought a position. And he is big into food, so they get a lot of free advertising. Well, not free, but a lot of advertising through him, and that is obviously very beneficial because advertising is a big cost for companies, a very necessary thing to get eyeballs. But also, it's a place where it's very valuable to have good marketing, and through Kevin O'Leary, they got influencer marketing and all kinds of stuff wrapped into one package. Yeah, so this is the company's website, the meal kit that puts quality first. They get cooking, 465 million meals shipped, but also shopped. Yeah, certainly looks very good on the images, as it usually is the case. Here is the chart. Doesn't look that appetizing. There is a but. I do see a very, 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 very substantial rounding bottom pattern that is bullish. If we start to play around with the percentage tool, which is pretty fun to do, just to get up here is 196%. To get up to these highs, 404%. These highs from back here, well, these highs from back during this peak, approaching 1,000%. There is the potentiality here of a very substantial upside if they can turn around the ship. And it popped up on my radar because we are currently testing an absolutely extremely important support level. This right here. This cannot, under any circumstances, break. Just can't. This level is a huge, huge deal. We do see that the market is reacting a bit to it. Some rally developing, going here into the daily data points. We had a bit of a rally, but the last 2 days, they got very weak as we approached the purple 20-day moving average. Yeah, it's a bit dangerous, to show weakness when facing the 20-day, especially from these kinds of lows. Looking here at the PPOs, RSI, we are at a very low level. On the daily data points, the MACD just extremely low. RSI emerging from a very buyable level here around 30 RSI. We are not at 30 RSI now. There's been a bit of a rally, but we are emerging from a logical level, which is good to see. So in my notes, I write double bottom on the weekly data points. I give the bulls a 7. That is, however, completely contingent on that double bottom. We also, on the long-term radar, we do have rounding bottom as well. That is very interesting to keep our eye on, but the number one thing, which is very, critical at the moment, is this level being tested on the weeklies. Blue Apron has not been public for a sufficient amount of time to get data to the right, to the left over the last 5 years. We do see that November, which is right around the corner, is dramatically better than October. It closes higher 50% of the time, 19.4% gain. Over the last 6 years, October and December are bad months, but November and January are good. So November, it's a month, right before the Christmas period begins. It's a month of higher levels of stress. So it could be that people are ordering a bunch more of these grocery delivery stuff in November. January also makes sense, given that people have New Year's resolutions, going to eat a lot more healthy, so they subscribe to like Blue Apron. So the coming seasonality was bullish, but it was very temporary. But for our perspective, now sitting in the end of October, looking at charts, bullish November is very good. Let's look at the fundamentals. Blue Apron has a number 4 sell from Sachs, F value, but A growth, C momentum. So if you are looking for growth, this is it. Industry rank bottom 43%, but it's a bit of an odd category, food miscellaneous. Market cap is small, 83 million US dollars. The insiders, they are selling, but this is from back in August. There's no transactions after that. At least they are not selling. Ideally, we would like to see them buy, but yeah, this is as good as it gets currently. I guess. Let's look at the consensus estimates. A whopping number of 3 analysts are covering the stock with an average 268% upside target. Highest is 320% above us. The lowest is 194% above us. And given the type of stock this is, we don't expect a good value score. The fantastic growth score and the price targets, and also at least the insiders are not selling. I will actually give the bulls a 7 here, but that is completely contingent on the insiders not putting on any more sells. Let's look at relative performance. We have a minus 31% long-term correlation with the S&P 500, 13% negative with XLI, which is the consumer discretionary ETF, minus 31% with PAGJ, okay, that is the leisure and entertainment ETF, and then we have minus 49% with PBJ, which is the food and beverage ETF. Looking short term, 25% with S&P 500, 40% positive with XLI, 18% with leisure and entertainment, and 27% positive with food and beverage. So yeah, we do interestingly have the strongest correlation here with the XLI. At least it was most positive. A bit unexpected, but because I expected maybe like food and beverage, maybe leisure and entertainment, but yeah, here it is. XLI is below the red 200-week moving average. This week we did try to peak a bit above it, so there is some bullish activity here, but there's a cluster of resistance levels above us. On the dailies here, you can see that on Friday we were way below, but then we closed higher. The blue 100-day moving average is definitively going to be a solid resistance level because it was such a big deal as a support level here. So what was once support will now certainly become a resistance, but that is still some way above us. Here we have these other indicators. Nothing really special happening on the weeklies or the dailies. Here is the relationship between Blue Apron and the consumer discretionary ETF. In this case, we have broken below the lows here of early February of 2020. Um, we are below all kinds of support levels. So yeah, all support is out the window in this case, which is not bullish, but you could argue that maybe we have underperformed so much that there's value. There's no seasonality here. Okay, so let's now compare the XLI with the S&P. Oops, the SPI, the S&P 500. Yeah, so it's a bit messy, but we are at this support level from back here in early 2020. Looking at RSI, we are also at a level that has a bit of a tendency to result in strengthening of the consumer discretionaries against the S&P 500. So let's look a bit at the seasonality, because for the consumer discretionaries, the coming season is, typically bullish, and yeah, we see here that discretionaries tend to outperform the S&P 500 all the way here into early January. Some mixed data in this case, but given that the strongest correlation is with consumer discretionaries, it is more bullish than bearish. We do end up with a pretty strong 5 in favor of the bulls. The key entry signal is that double bottom, so the entire bullish thesis is contingent on double bottom holding. If we were to lose it, that would be just very, very, very bad for Blue Apron. If we do get a low here, though, the upside could be very substantial. So we have some time left. Let's run through some charts in the XLI portfolio. We start with Amazon, which is on the top of the list. Amazon had a bad week. We're all the way up to the purple 20-week moving average, then pulled back significantly. So yeah, this chart is looks head and shoulder-ish. It's a difficult trade. It's messy. I think it's a bit messy. On the dailies, there is some horizontal support here that's potentially viable. The issue with Amazon is that in order to rally, it needs very big good news, because the company is so massive. Very much unlike smaller companies that can be moved by some small news, and then you suddenly can get a big gain or loss, of course. Yeah, looking at these other indicators, the sell-off this week, it did push us quite into the downward territory. Then again, it was based on real news. So yeah, I think it's a bit early to at least have any kind of big position on Amazon. I think the market needs to just digest the news, because it was quite surprising. Here is Tesla. A bit of a similar thing here in the sense that the chart is a bit messy. We are at a low-ish horizontal support-ish level. There's that. Yeah, but when we go here on the dailies, there's already is a rally ongoing. Let's look a bit at RSI. Yeah, so we are not yet in any kind of dangerous territory for RSI or the PPOs. So sure, there could be more left here in this rally. But as you see here, long term with this chart, there's been many attempted rallies now that have failed. And this is also one of those companies that has a very big market cap. So it just takes so much to make a new all-time high when you have that set up. So yeah, we have looked at a bunch of stuff. I think Blue Apron here is just very interesting. It's definitely a very speculative trade, but I think that buying something like Blue Apron is a very good alternative to like gambling on the lottery or casinos and stuff like that. But definitively, this is make or break for the double bottom.